What's up, everybody? In this video, we're talking about 5 reasons why Google is the #1 AI stock to own in this market. Google has been around and has been a highly successful stock and company for a long time, and they have so much more than just AI. They're not just built up on the hype train that is AI, right? I'm going to get into the other 4 reasons in the rest of this video, but real quick, what we're looking at right now is just Stock Unlock. It is my new favorite way to analyze stocks. They have such a simple interface with all the information you need, everything about the balance sheet, the growth, analyst expectations, dividends, the financials, everything you can imagine. They have a free version and a paid version if you want more. There's also a portfolio tracking tool, which I am now tracking my portfolio in, and I'll share at the end of the video. If you're interested in giving Stock Unlock a shot, I have a referral link in the description below. So if you like what you see, just check out their free or their paid version. I think everybody who signs up gets a 30-day free trial anyways. All right, let's get to it, right? So analyst expectations or price targets, which I really don't care about. The high price target is 67.5, and this is for the next year. Average is 10.9%. and low is minus 11.4%. So if you look at it this way, you have a little bit of a margin of safety there where, analysts price targets on the low side are just down 11%. I don't really mind losing 11% in any single year. But again, we have to take these with a grain of salt. What I really care about and what I'm interested with Google in terms of AI is a lot of the stuff that they announced at their Google I/O event last week, right? And these aren't just hypothetical use cases. The beautiful thing about about Google is that they have hundreds of millions, billions of users across their line of products and apps, everything from Gmail to search to YouTube to AdSense to their cloud and collaboration software. They have a huge install base of users that they can now implement these AI tools in to save their users money, make things easier for their users that are then going to make their platforms more sticky and more beneficial to people using them. So the story was that Google was going to be disrupted by ChatGPT, and no people weren't going to use Google search. They're going to use Bing, and just the logic on that. If you think, are you kidding me? You think that literally all the lead that Google has built over the last decade plus in search, where it's the default search option for people on the internet, at least in the United States, you think that's just gone and they're going to go to an inferior product of Bing because of ChatGPT? No, Google's lead and the way they dominate markets is not just going away. So let's get into some of the AI-related real use cases from Google I/O. In March, we announced exciting new products that infuse generative AI, that's what everyone's so excited about with ChatGPT, into our Google Cloud offerings, empowering developers to responsibly build with enterprise-level safety, security, and privacy. They include Gen App Builder, which lets developers quickly and easily create generative chat and enterprise search applications. Generative AI support in Vertex AI, which expands our machine learning development platform with access to foundation models from Google and others to quickly build, customize, and deploy models. We also introduced our vision for Google Workspace and delivered generative AI features to trusted testers in Gmail and Google Docs to help people write. So everything that people use in Google Workspace, Gmail, presentations, Google Docs, Google Sheets, that's going to benefit from the work that they're doing with generative AI. Last month, they introduced Security AI Workbench, an industry-first extensible platform powered by our new LLM security model, SecPalm, which incorporates Google's unique visibility into evolving threat landscape and is fine-tuned for cybersecurity operations. Okay, and then they're talking about some of their customers bringing ideas to life with generative AI, people already using it. GitLab stands out here, but then they've got some examples, right? You've probably heard of Canva. Canva is a visual communication platform. They use Google Cloud's rich generative AI capabilities and language translation to better support its non-English speaking users. Users can now easily translate presentations, posters, social media posts, and more into over 100 languages. Company is also testing ways that Google's Palm technology can turn short video clips into longer, more compelling stories. The results will be a more seamless design experience while growing the Canva brand. Okay, Deutsche Bank, this is a massive bank. They're testing Google's generative AI and large language models at scale to provide new insights to financial analysts, driving operational efficiencies and execution velocity. There's an opportunity to significantly reduce the time it takes to perform banking operations and financial analysts' tasks, empowering employees by increasing their productivity while helping to safeguard customer data, privacy, data integrity, and system security. Okay, so this is a way that Deutsche Bank can make more money, but also save money by automating things and potentially needing less people, right? Which could be bad for jobs in a certain way, which is a whole nother discussion, and more videos to be made on that. All right, Instacart. Always looking for opportunities to adopt the latest technological innovations. And by joining Workspace Labs program, they have access to the new features and can discover how generative AI will make an impact for their teams. Uber, I'm just doing kind of the popular ones here. Uber's creating generative AI for customer service chatbots and agent assist capabilities, which handle a range of common service issues with human-like interactions with the aim of achieving greater customer satisfaction and cost efficiency. Again, better service, saving money. Additionally, Uber is working on using our synthetic data systems, a technique for improving the quality of LLMs in areas like product development, fraud detection, and employee productivity. Okay, Wendy's. Everyone's heard of Wendy's. Working with Google Cloud on a groundbreaking AI solution, Wendy's Fresh AI, designed to revolutionize the quick service restaurant industry. Technology is transforming Wendy's drive-through food ordering experience with Google's cloud generative AI and LLMs, with the ability to discern the billions of possible order combinations on Wendy's menu. In June, Wendy's plans to launch its first pilot of the technology in Columbus, Ohio, before expanding to more drive-through locations. Okay, this is huge for Google Cloud, right? They're really focused on trying to partner with other organizations, and they say they're trying to make the most open hyperscale cloud provider. That includes the AI ecosystem. They're expanding upon partnerships announced earlier this year for every layer of the AI stack. Chip makers, companies building foundation models and AI platforms, technology partners enabling companies to develop and deploy machine learning, app builders solving customer use cases with generative AI, and global services and consulting firms that help enterprise customers implement all this technology at scale. And then they're introducing new generative AI capabilities for Google Cloud, Duet for Google Cloud, a new generative AI powered collaborator. Duet AI serves as your expert pair programmer and assists cloud users with contextual code completion, offering suggestions tuned to your code base, generating entire functions in real time, and assisting you with code reviews and inspections. Can fundamentally transform the way cloud users of all skill sets build new experiences, and is embedded across Google Cloud interfaces. Okay, and now jumped over to just an introduction of Palm 2. This is on Google's blog. What I want to show with Palm 2 is that it's already powering over 25 Google products and features. We talked about the workspace stuff, but what I haven't mentioned in this video is MedPalm 2, which is trained by their health research teams with medical knowledge, can answer questions and summarize insights from a variety of dense medical texts. It achieves state-of-the-art results in medical competency and was the first large language model to perform at expert level on U.S. medical licensing exam style questions. We're now adding multimodal capabilities to synthesize information like x-rays, mammograms to one day improve patient outcomes. MedPalm 2 will open up to a small group of cloud customers for feedback later this summer to identify safe, helpful use cases. So that right there could drive, a ton of more compute and use and demand for Google Cloud, which again, isn't just money that they're going to make from, AI services necessarily, but it's going to drive what their real cash cow is. And that's use of everything from advertising, Google AdSense, to Google Cloud, to even different ways that you can collaborate and do things on YouTube, utilizing some of these AI advancements and large language models. One of the things I love about Stock Unlock, and let me know in the comments if you use this side-by-side analysis and insights from Stock Unlock, but you can compare two stocks next to each other, right? So right now we're looking at Google and we're looking at Microsoft. They give an overall insight score and Google gets a 3.81, which is good. Microsoft scores a little bit higher, but I don't just take that at face value, right? I want to dig in and see why. Right here, we're looking at next year's projections, right? Google is on the left, Microsoft is on the right. Next year, projected earnings per share growth, about 24% for Google, higher than Microsoft's 13%. The revenue growth, right around 10.5%. Same thing for Microsoft, so even there. Projected EBITDA, earnings before interest, taxes, depreciation, and amortization, 37% versus almost 14% for Microsoft. Analyst rating, don't really care about. Analyst price target, still don't really care about it, but the average is 11% higher for Google versus about 9% higher for Microsoft, right? Microsoft does pay a dividend, but the dividend is not super high. It's 0.9%, but still that adds up over time. I do think there's a potential that Google either continues to buy back more shares or pays a dividend in the future. We'll see about that. So there's definitely potential there. If you look at Microsoft and Apple from the time they started paying and growing their dividend to now, it was actually a period of pretty awesome growth. So if Google does do that, who knows? There's a chance that that's actually a very good time for the stock. So it might be good that they don't pay a dividend yet. Financial health, I mean, neither of these companies are going anywhere. They both have very, very strong balance sheets. But the thing to focus on here is these shares decreasing, right? Google, over the last year, shares are down almost 4%, meaning they've bought back about 4% of shares. As companies do this, that makes every outstanding share that people like you and I can hold worth more because there's more earnings per share, more revenue per share, more free cash flow per share because there's not as many shares outstanding. Recent growth is actually pretty bad for both of these companies. And it's just because they're coming off such a strong period coming out of COVID. And so their year over year comparisons were pretty tough. But I'll get into how I'm looking at the growth of Google in the future. Profitability, again, this is where Microsoft might deserve a little bit of a higher multiple, right? It is a more profitable company, right? If we look at the gross margin, 68% versus Google at 55%, operating margin of 26% for Google versus 41% for Microsoft, net margin 20% versus 33%. So everywhere down the line, Microsoft is better on profitability than Google. They both have very high returns on invested capital and equity. So that's great for both companies. And then valuation, right? And this comes down to why I like Google better than Microsoft, better than Apple, and definitely better than NVIDIA. Google's trading at a PE of 25.9, which is below its 5-year average of 28.6. It's about 10% below that. Microsoft is trading at a PE of 33, which is about 4% above its 5-year average PE. And it's about, 30% higher, a little bit more than Google's PE. Price free cash flow, 24, again, below its 5-year average versus 40 for Microsoft, which is above its 5-year average. Forward price to earnings growth ratio of 1.1, which is fine, versus 2.5 for Microsoft, which is very bad. And we can get into kind of some longer term returns, right? So 3-year stock growth, 72%, which is beating the S&P 500, but it's actually also beating Microsoft, which is interesting. Microsoft's at 68%, still beating the S&P 500 since 2015. Google has returned 351% versus 99% for the S&P 500, nicely beating the S&P 500. And since 2011, Microsoft is up 1,000% versus the S&P 500, up 222%. So both strong outperformers over the long term. Now I've jumped over to Stock Unlock's DCF calculator, which I use this to see A, what is the market currently pricing in for the stock? And then B, what could returns be based on what I think could happen with shares over the next 5 or so years? So we're looking at free cash flow here. Markets are really focused on free cash flow for stocks. We're going out 5 years. And this is basically what the market is telling us it expects from Google over the next 5 years based on the current fair value price of the stock. Stock's right around 119. And so what the market is expecting is over the next 5 years, 13% annual free cash flow growth, about 1% of shares bought back annually, and a price to free cash flow ratio of 20, and then a discount rate of 10%, which is kind of a standard discount rate for companies as solid as Google, right? And so you can see the average price free cash flow for Google over the last 5 years is 28. So this is well below its historical average. And this is basically what the market is pricing in for Google. So let me know down in the comments, do you think the market is being too conservative, too aggressive with Google right now? Would love to know what you think down in the comments. But let's play with these numbers a little bit, right? I mean, we see right here that over the last 5 years, Google has actually bought back almost 2% of shares. So let's jump jump the share buybacks to 2% per year, which I don't think is ridiculous. Remember, in the last year, it was actually 4%. So there's just a chance that this is still conservative. And then let's bump up the free cash flow growth, which has been 23.8% over the last 5 years. Let's bump that up to 16%, which I think is, pretty rational free cash flow growth, especially as they focus on being, more profitable and squeezing more margins out using things like AI to improve margins, right? So that means the stock would be with these numbers, the stock is currently 17, almost 18% below fair value at 140. And then 5 years out in 2028, stock price would be 226. That's up about 90% for a 14% compound annual growth rate. I'm at a place in my investing where I want to make consistent money and do well over time, earning very high quality businesses that are a little bit less speculative than businesses I've owned before. It's why you've seen me trade out of Rocket Lab and different stuff like that. I value making money in the stock market for sure, but I value being able to sleep at night and creating an investment process and owning companies that I can seriously own for years. And that's another reason why I think Google is the best AI stock to own right now. They have such a track record of success. It's not a high risk investment. It's trading at a cheap multiple compared to where it has historically. And they have almost endless resources to invest in AI. They've got a dominant lead in markets that they're already in, and they're going to use AI to sell into that and to leverage cloud more and all of their tools and things that people already use more. And I'm happy with earning 14% per year. I think that's kind of a conservative case, and I could see it being better than that. But that's kind of my base conservative case. And I'm happy putting my own real money into a stock like Google, which I currently own. So let me know if you agree or disagree in the comments. I do track my portfolio in Stock Unlock. What I want to share is that I'm trying to have a balanced approach to building a portfolio of truly durable companies that can, provide sustainable returns while I sleep well at night and can focus on work and other things instead of just trading in and out of stocks, which is a huge waste of time for a lot of reasons, at least in my experience. And so just to give you a feel for it, these are the types of companies that I own. And what you'll notice is that there's a mix of dividend payers and growth stocks, probably some stocks that you've never heard of: Haro Health, MedPace Holdings, Mercado Libre, you've probably heard of, Perimeter Solutions, Vista Energy, Atcore. Those are some of the smaller companies that you may not have heard of. I've got about 5% positions spread across, roughly 20 companies. And what's cool is you can combine portfolios in Stock Unlock and then track different ones, right? So I've got a dividend growth portfolio. I can track how this does independently. That just tracks the dividend stocks that I own. And then I've got a long-term growth portfolio, which tracks the growth side, right? And so what I can do over time is see which one is performing better than the other, which one is not doing so well. And then in a few years, if I realize I'm just not a good growth investor, maybe I need to focus more on my dividend stocks, right? And so that's what this tool is going to allow me to do. That's one of the things I love about Stock Unlock. And then you can see them both combined and see how the portfolio is doing as a combined portfolio. Okay, so if you want to support this channel, you can do that in 3 ways. Like the channel, subscribe to the channel. That helps YouTube share this with more people. Tells YouTube it's a good video. Click on the Stock Unlock link to check Stock Unlock out. That helps me out. And then I have an email newsletter, austin.substack.com, where I share real time and deep dive research that people on YouTube just simply aren't interested in at the masses. And so if you want deeper research, deep dives, and a look into real time what I'm doing with my portfolio, that's where I share it, austin.substack.com. I just wrote about Magellan Midstream Partners being acquired by ONEOK and what I'm doing with my shares. So if you're interested in that stuff, all the links are in the description. I appreciate you watching. And even if you don't click any of those links and you're just here to watch videos and learn, that's awesome too. And I'm happy for you. I'm proud of you for being an investor. And I want to hopefully just help you be a long-term investor, not encourage you to copy anything that I'm doing. That's what I'm trying to spread here, is a love and a passion and acknowledgement of the power of long-term investing.